Hey, what is going on? It is Crypto Bobby. Hope you are having a great day, great night, wherever you're watching or listening in from today. As the crypto asset market has basically gone sideways, the total market cap really not moving within a percentage point, which is pretty unusual for the crypto landscape. There were two articles that came out that I thought were excellent. One was from Meester, who is a pretty prominent Bitcoin investor and economist, talking about his prediction for Bitcoin to not return to its all-time highs for 2018, being short to medium term sideways slash bearish, long term still bullish. Want to talk about the reasoning behind that because I thought the article itself was excellent. We'll obviously link to it below in the description as well. And then there was another article, and this one is pretty crazy. I think there's a lot of things here that myself I've obviously heard about before, very familiar with. But the fact that this was written in a publication, there's a lot of crazy stuff in this article. So it is in regards to one of Asia's biggest crypto hedge funds, FBG Capital, and it's talking about basically how they invest in the crypto world and some of the shadier, shall we say, practices that they go through when it comes to investing and why they invest. And some people have said great things about them. Some people have said some not so nice things about FBG Capital. But this article itself from Forbes will shed some light on maybe why some of your bags pump so hard sometimes, and also why they dump so hard sometimes as well. So we'll touch on both of those today. If you are new to the channel, hit that subscribe button. And if you have been here for quite some time, hit the thumbs up button, hit the like button. Really do appreciate that. So getting back to Meester, this article I really liked. Whether or not you're bullish, maybe you're just a perma bull and you want the price of Bitcoin to go up forever. Also good to hear about some of the counter arguments from fairly prominent, pretty damn prominent Bitcoin investors, and Meester is certainly one of those very well-respected individuals. At the high level, he says this: we don't expect new highs in 2018, meaning we do not expect Bitcoin to retrade, to go back to that $20,000 we saw back in December of 2017. And then here's some of the very high-level reasoning. It's despite an already 6-month cool-off period in 2018, we see more sideways movement and downside potential in the Bitcoin price due to, number one, sluggish retail demand, hesitation from institutions, and a current market cap that still seems high relative to on-chain activity. And there are a number of different things that he says in this article that I like, but going back to it, he said a lot of people have already come out and said the $5,700, the $5,700 that we saw previously for Bitcoin, there are a lot of people that are now calling that the bottom for the year and that we're going to stabilize and move back up. He does not necessarily see it that way. He says short term, while they remain bullish in the long term on Bitcoin, in the short term, they remain very cautious about being optimistic from a price standpoint. And there's a couple different things that they've talked about. Trading volume as an issue, Bitcoin mining, the price of mining and the profitability of mining pulling back is an issue. And then also specifically last year's FOMO and retail interest has now become very sluggish. And while I am not as in tune with the mining profitability, and I've heard a number of things in the past about kind of varying things in the past about mining profitability and kind of what the break-even point is for a lot of miners. I think CNBC and some of these other larger mainstream media like to go out and say, hey, if it drops below $5,000, it's not going to be profitable. If it drops below $4,000, it's not going to be profitable. I've also talked to people in the industry that have said that they mine Bitcoin at a cost basis of around $1,400, $1,500 per Bitcoin. So I've heard a lot of different things on that standpoint, and I can't necessarily confirm or deny what Term might be saying here. But one thing I think that is really interesting is the FOMO, the retail interest, has basically completely died off for the most part. You can see that across the industry, whether it's just general, I think, interest in the market. People point to Google Trends. You can look at the numbers on my YouTube channel of some of the views in the past versus some of the views recently. There are a lot of different things that you can point to. And I do think that Google Ter specifically looks at some of the Google searches and Google trends, and I do think that that is a lagging indicator on price and not necessarily a leading indicator on price. But you can see that a lot of that has basically died off and fallen off a cliff in the past, and that has the lack of new retail investors coming in, because there's not conversations, there's not talks, and there's not 17-year-old kids on YouTube anymore driving Lambos talking about how they bought that with Patcoin or whatever it might be. A lot of the retail interest has dried up, and a lot of that, not only has it dried up, the new retail interest has dried up. A lot of the previous retail investors have left the market because it is not easy to be profitable anymore. It is not easy to make money investing, and you're much more likely right now to be losing money if you're going specifically long. And in addition to the retail interest, one thing I think is definitely worth noting is Ter's thoughts on the Bitcoin ETF. And this is something that I would tend to agree with, and I've echoed this before, but Ter says the first Bitcoin ETF will likely not be approved before 2019. I would personally echo that. I think that while on August 10th or whatever it might be, there is, I think that's the Van Eck ETF is up for approval. I believe it will be pushed back to the maximum extent that the regulators allow that to. Historically speaking, every single time in the past, there has been with the Bitcoin ETFs, they've gotten pushed back, they've gotten pushed back, they've gotten pushed back, and then they get denied on the last day. I don't necessarily think that the Van Eck ETF will be denied. I just don't think that it will be approved on the first go around. And the regulators will push this back to have more and more time to consume this type of information. And then from an institutional standpoint, this is a lot of thing that obviously people have been talking about for quite some time. The institutions are coming, the herd is coming, all of the institutions are getting into the space. It is happening, and you can see here, while Ter says, while institutional investors are certainly getting involved in Bitcoin, the vast majority of the firms are trading firms who are looking to make markets regardless of price. They're not just buying and holding Bitcoin. They are actually market makers. They might be, an OTC desk, whatever it might be. They're making money off of volume, regardless of the price going up, down, sideways. It doesn't necessarily matter. They're market making. They are not necessarily, they're market making and or they're trading. They're not just saying, oh wow, I'm gonna go buy $1 billion worth of Bitcoin and I'm gonna hodl this because that's the sophisticated way to go about things. That is not what institutional investors are doing. Probably not what they will be doing. But yeah, I think that's something a lot of people thought is like, oh, these institutional investors are just gonna hodl. No, they're market making, they're trading, they're providing liquidity, they're doing a lot of other things outside of just buying a bunch of Bitcoin or buying a bunch of crypto, sitting on their hands and letting it run. So really just summarizing this, I think that it is, I definitely recommend reading the article because there are a lot of points, like I said, even if you are very bullish in the short term, there are certain reasonings here that either will help you to stay more informed, learn the counter argument, and Ter is a big Bitcoin advocate, so don't sit here and say FOMO, FUD, blah, 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 blah. That's a stupid argument. Don't waste my time with that. But there are a lot of good different points about why the market might be short-term bearish for the time being. He also does provide some counter arguments as far as, hey, Bitcoin dominance is gaining ground, the 2020 block reward having, potentially the ETF approval actually happening, that being a massive catalyst for certain things. But overall, I think the conclusion that he makes is quite interesting, quite sound, where him coming out and essentially saying, I think the market needs more time to absorb the 36-month run, because there was basically a 3-year massive bull market in the crypto asset industry, and there needs to be a little bit of time for the market to just absorb that ridiculous bull run, kind of get its feet back under it, bleed out maybe, or move sideways for a little bit more time, get the infrastructure built in place, and then queued up for another bull run. So when you look at something like this, what does this mean for you? It means a couple different things. If this is indeed true, be ready for more of a potential downturn in Bitcoin as well as in altcoins. Also, this might mean that, hey, maybe you got into the crypto industry, crypto asset industry late. or you think late. You got in December, you got in January. Well, this might be a decent opportunity from a dollar cost average perspective if this turns out to be true. If you see Bitcoin sitting at $6,000, $5,000 for quite some time, whatever it might be, and you have an opportunity to dollar cost average in at a number that is significantly lower than where all-time highs were, that could be a decent opportunity for you. And that's something that you can certainly look at and evaluate as you continue to base your strategy in the future if you are in this market for the long term. Myself personally, I am considering a lot of these, while some of the crypto assets I hold are short-term type of plays, in the long term, I am very much bullish on Bitcoin. And if this does indeed turn out to be true as a short to medium term kind of continued sideways / bear market, that to me is an opportunity to accumulate more Bitcoin for myself personally. Doesn't necessarily mean that's the case for you, but that's what I look at this as well. So that's kind of my thought process as I read this article, and thank you to Turf for putting this out because I really did enjoy it. Now, one thing too, so I talked about this other article here, and this is entitled, it's from Forbes, it's entitled Tricks of a Crypto Trader Meet Asia's Hottest Crypto Hedge Fund. And I'm sure some of you folks out there have heard about this hedge fund in the past. It is FBG Capital. And there are a couple statements in this article that to me are pretty mind-blowing, that they were either readily admitted or just printed. And FBG was associated with them. So some of this stuff, if you are pretty deep in this industry, you're probably pretty familiar with some of the tactics that have been used. But if you're new to this industry, there are a lot of people that always cry manipulation, blah, 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 and whine and cry about things. This is the type of thing you probably want to read front to back. It's a pretty short article, but this is the type of thing you want to read if you're curious about quote unquote manipulation, or what sophisticated investors might be doing. Because this is when you buy the top, in my opinion. And it starts with this. So one of the first things, and shout out to Luke from Venture Coinist for posting this, but FBG's approach has 3 pillars. Invest like a venture capitalist in initial coin offerings, ICOs, trade on news and events, okay, by moving in and out of tokens rapidly, and critically exploit insider relationships and marketing hype to ensure profitability. The last sentence there, exploit insider relationships and marketing hype to ensure profitability. That's the type of thing that you look at and you're like, holy crap, how is this in Forbes right now? That's nuts. That was kind of associated with that. And then Forbes goes to say, the ideals of democratization are a joke and being an insider is the surest path to riches. And in a lot of cases, it's true. Some of these crypto hedge funds don't care about your best interests at all. They're there to make as much profit as humanly possible. And if that comes down to exploiting insider relationships and generating crazy marketing buzz, then that's what's going to happen. And there are a couple other, it's a really interesting article. I highly recommend you go through the process of reading it. But there are a couple of different things here. So I'm going to pop down to another aspect that was interesting. They go over, some of the pre-sale discounts that FBG gets. Some people like Olaf Carlson-Wee, who is pretty well respected, runs Polychain Capital, which is the largest fund in the US with over $1 billion under management, basically said, I view FBG as one of the most talented investor teams in the space. And then there are other teams out there, if we go down here, that, there are other teams that have essentially criticized FBG of being a flippers or pump and dump. So Yubo Ruan, who is Palo Alto 8 Decimal Capital, said they're flippers and their reputation is pump and dump. And how does that happen? So there are a couple interesting things that were pointed out in this article. The first one is they say, not all of FBG's tactics seem completely above board. They talk about this. One of the little publicized investing dynamics is that the FBG execs have very close relationships with some of the largest crypto exchanges. Those crypto exchanges, OKX, Binance, and Huobi, obviously charge a significant listing fee to get on the exchange. However, when FBG is involved with an ICO, they have relationships with Binance, OKX, and Huobi, and they can help those ICOs get onto exchanges. And not only that, but FBG is a market maker, meaning that they provide liquidity and significant trade volume on these exchanges. It says they make about $10 billion worth of trades a month. FBG, one company, one crypto fund, makes $10 billion worth of trades per month. They're responsible for $10 billion worth of volume. And when it comes down to it, they can obviously influence some of these exchanges like a Binance or like a Huobi, like an OKX, and provide a really good opportunity for some of these for some of these tokens that they're working with, because they can provide a significant amount of volume. And when there's volume, it tends to bring in additional interest. Just think about some of the coins that you've seen in the past where maybe you're not paying attention to a coin and all of a sudden it gets listed on Binance and it has a crazy amount of volume. Guess who might, and guess who probably was behind that? FBG or another company, another crypto hedge fund similar to that. And then to that point as well, this is one of the last things where they talk about Tron. And I typically make fun of Tron. I'm not going to sit here and say I don't. But they said, why did FBG buy into Tron? We thought he was a very good marketer, says FBG partner, in regards to Justin Sun, and talking specifically about just really the marketing hype. And in China, FBG and a lot of these other companies connect ICOs with media agencies that will pay bloggers to write positive reviews of their tokens and positive glowing news articles, things like that. So this article itself goes into a lot of what I would consider the shadier practices in the crypto industry and why there is a lot of scrutiny. I don't know the legality of all of this stuff, and it's not based in the United States, and I'm not in Asia, and I don't know the entire scene over there. But when a lot of people do get frustrated about consumer protections and things like that, to be pretty frank, I think this is what it's in regards to. And this is why regulators do want to hammer this space in some respects, because some of the stuff in this article is just absolutely outrageous. It seems pretty crazy, seems pretty outrageous. Exploiting insider relationships, basically paying the marketing, the exchange fees, like all that type of stuff. There's a lot of crazy things that are going on in this industry that shows how nascent it is and how much money these companies are making due to their position in the industry. So I would highly recommend taking a full read of this article. Number one, just so you have a better idea of how things are moving in the industry, but also in addition to that, it goes to show what you're kind of up against. And sometimes when something pumps like crazy, there's probably a reason behind it. And when it dumps like crazy, there's also probably a reason behind it as well. So certainly something to take a look at and to consider. Outside of that, I really do appreciate the time today. As I said before, if you're new to the channel, hit that subscribe button. If you enjoyed this video, hit the thumbs up button, hit the like button. Shout out to everybody listening on the podcast as well. Crypto Bobby signing out for today. Take it easy. Peace.